there for a second. 105.7 Highlands Light FM. Morning all. We're at 8:42 now, 18 before 9. Not that one. That advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. It's time. Check in and see what you should be consulting your financial advisor about with a look at your money this morning. Kind of a quiet day yesterday on Wall Street. Let's check in with Phillip Statler from Statler Financial Services and find out what it is. Just a second. Stop that. Phillip, good morning. I didn't really...
We going to the races this morning?
I pushed fat fingers. I pushed the wrong button and I wanted to do it again. How are you today, sir?
Hey, doing well, doing well. We mixed bag yesterday, but it looks like maybe, we had a green start to the day, but it looks like maybe it's going to trend the other way right now.
Well, shucks. Setting the table, yesterday was a legitimate mixed bag, but unbalanced, call it flat. The Dow down about 0.22%, down 92 bucks. Standard & Poor's, though, was basically dead flat, 44 cents to the green. NASDAQ did gain about 1/3%, up 62 yesterday. So on balance, it was a positive day, but it was about as close to flat on average as you can get, wasn't it?
It was, Dave. You almost, it's just flat. And it stayed that way all day, pretty much. I mean, I would look at it, and it would go one way, and then it would be back the other way. So it really and truly stayed really skinny all day.
Yeah, it wasn't really a lot of movement all dang day. It was just luck of the draw as to whether you were up or you were down at the close, although we are kind of in that mold right now where I'm seeing a lot of smart investors taking money off the table at 4 o'clock before the overnight happens and something weird happens on Twitter or whatever the other social media is, and then putting it back on the table in the morning because there's that little tail down at the end of the day each day. Interesting stuff going on yesterday. We ended up with the beige book, and the trend indicated by the Federal Reserve, anyway, from their beige book, is that the economy is resoundingly slowing down, and that's kind of backed up by the data we got this morning. First-time jobless claims, talking about a little bit more than we expected. I mean, you got to put it in perspective. They expected 236 to 240,000 people filing for unemployment for the first time. We got 247,000, but the rule of thumb has always been that around 250 is about the norm for a normally functioning 4% unemployment economy. So I got to believe that they aren't too concerned about that number this morning.
Well, yeah, it was, it was pretty close to what it was. I mean, it was a little bit more than expected. It was more than what it was last month as well. The last month it was 240,000. And I did hear them talk about continuing claims. Continuing claims remain at about 1.9 million, a little over 1.9 million. And I think this is 2 months in a row now that we've been in that range.
Which kind of indicates that we're getting, and I think we're now actually being able to say there's a trend gradually upward in terms of unemployment claims, which isn't a good news if the trend is solid. But nevertheless, the absolute number this time is enough to make you raise your eyebrow, but not necessarily enough to make you change your strategy so far anyway. Got some additional tidbit news that comes out in terms of anecdotal information. Procter & Gamble announced this morning they're cutting back their workforce by 7,000 jobs. My Lord. I hope they can still make enough. Yeah, I hope they can make enough dial to be able to keep us going on that.
That sounds like a lot. As a percentage, it's probably not that big of a percentage of their whole total workforce.
Probably not. They're a major labor force, I know. Other tidbits out this morning, the European Central Bank, I don't think there's been a month they've met for the last 4 or 5 months now that they haven't cut their reference interest rate. And in Europe, the reference interest rate got cut again when their inflation numbers showed up better than expected. That doesn't put any more pressure on our open market committee on Tuesday, I assume.
Who knows? I doubt it. I really do, given what they're looking at. They want our inflation numbers to fall. and that just doesn't seem to be happening fast enough.
Yeah, that's the thing. They're falling, but they're falling at just a snail's pace. And the conventional wisdom with our Trump tariff strategy is that there's going to be somewhat of a bump upward in inflation. So while President Trump is screaming at the top of his lungs for an interest rate cut, all the other banks in the world appear to be responding with interest rate cuts. We, on the other hand, might be best advised, and I think you and I would agree, we probably are best advised to hold steady and see what happens. The tidbits I had on Monday coming out of the rubber chicken speeches from the Fed governor is don't even think about it until September, and a couple of them were saying don't even count on it in September.
Yeah, I think so. I mean, I think we're just in this patch where the fear is if you lower interest rates, then you're going to ignite inflation again. And so we've already got a lot of headwinds with the tariffs. That's going to be inflationary. And so we don't want to step forward to reduce rates and then all of a sudden have to backtrack and increase them again because that wouldn't look good either.
Interest rate increases always have a deleterious effect on the market. So, not lowering them to avoid having to raise them again always sounds like a good idea. One of my headlines, we're now talking about the international currency markets. Sound as a dollar, the American dollar just had its weakest start to a year on record. I checked the currency valuations around the world. Our dollar is trending downward in value everywhere except Canada, which kind of makes me want to bang my head against a wall because we're actually rising against the Canadian dollar, which generally is considered good news when we get cheaper compared to the American dollar for our tourist purposes. But bottom line is we're decreasing our value, which from our standpoint anyway, doesn't necessarily bode well for being able to liquidate those tariff increases.
No, it doesn't. And it's funny that how we line up against Canada versus everybody else, right? So, hey, I did see this
I'm not
come
really
through,
clear
Dave.
as to why. I'm not really clear as to why that is, but like I said, we always like it when the Canadian dollar rises in value compared to us because the next snowbird season generally means good news, and when that happens.
Exactly. So, hey, I do want to mention this because I was scanning through a couple things as we were talking, and I saw this. We're talking about the jobless claim number. It surged that 247,000. That's an 8-month high on unemployment claims. Yeah.
I was looking at the trend level, which is pretty well solidly going up week by week by week, but the 8-year high is not exactly the number you're looking to hear either. Other things affecting it, I was kind of glad to see the market end up relatively flat after the ADP private sector employment report yesterday, because that was one of my tip sheets called it an eyebrow-raising miss. I'd put that mildly. That kind of adds some additional weight to the big federal number that's going to come out tomorrow morning now after our 3 banner days of employment information. They're still expecting, according to one of my sheets, still 130,000 jobs added tomorrow. You said one of your sheets was expecting the trend to go down from that, though.
Mine shows the expectation to be 125,000 tomorrow. Unemployment rate to stay about the same, but that's going to be a huge decline from the prior April reading.
Absolutely. Yesterday we talked about some guidance coming out of one of the dollar stores not being too good. The day before that, we had Dollar General setting the world on fire. How is another discounter doing? How did Five Below do this past quarter?
So Five Below is more like the Dollar General. They had a good quarter. They beat by 4 cents a share, came in at 86 cents. Revenue was ahead of expectations as well. It's got them trading up 10.5% this morning. So they also gave some upbeat guidance for the current quarter as far as revenue. So that's all good news for Five Below.
That's good to hear. I always look at the discounters being baseline budget numbers because if Walmart and the other discounters do well, generally that at the very least means the underpinning of the economy is doing okay.
That's that if they're doing well, then at least that means more people are shifting that direction, right? And we're not kicking people even lower. And so
yeah, it's a reading on the Staples trade as
Yep.
much as anything from my standpoint.
Yep. So
what else are we at?
So we got Lands End. We don't talk about them much. They used to be a big time clothing retailer. Rallied this last overnight. They came in, uh, lost 18 cents a share, which is what they were expected to do. Revenue was a little less than expected, but they said that they've taken steps to mitigate the effects of higher tariffs. And so I don't know, maybe those words get you an increase in value. They're trading up almost 5% this morning.
I find that interesting, because if I remember correctly, during its glory days, Land's End used to advertise that they were all domestically produced clothing. Evidently, they're not doing that much anymore.
I guess not. That's yeah.
Really?
Yeah. I have no idea, but from a pricing standpoint, they're not a high priced clothing line, so I'm thinking that I'm not so sure how much of it's actually here.
Yeah, they used to be. You mentioned that was something we don't talk about much anymore. They used to be a premium upscale line of outdoor wear, and I half lived in them when I lived up in Wisconsin. It's kind of a different company than it used to be. I guess that also changes their import policies. Anything else?
So. Yep. So I have. I don't have numbers, but I've got PVH, Calvin Klein, Tommy Hilfiger, that group. They cut their second quarter earnings per share guidance overnight, again, citing higher tariffs. And so they're trading down 9.5% this morning.
I'm starting to see a trend here. Downscale and discounters doing generally okay. Upscale leisure wear not doing as well. That seems to be almost a tale of the tape that we've gotten out of earnings season, isn't it?
It does at this point. I got one more for you, Dave. It's not a household name, but it is from a business standpoint. MongoDB, which is a database storage company. They had a really good quarter. They came in at $1 a share versus 66 cents expected. Revenue ahead as well. They surged up this morning 18.8% right now.
Cool. Appreciate it. Resetting the table for the morning, it was unbalanced, flat. Blue chips down, the more adventurous stocks up yesterday. 45 minutes before we open this morning, what are we looking at?
Dave, we've had a little flip-flop. We've got green ink right now. Dow's up 1/4%. The S&P 500's up not quite 1/3%, but almost. And the NASDAQ 100's in that same boat, almost up 1/3%. Russell 2000's up about 0.4. So everything's solid green right now. On the other side, huge jump in silver, Dave. Silver up, let me see if I'm seeing that right. Almost 4%. 4% right now. Up 4%.
Wow.
$36.03 an ounce. Compare that to gold. Gold's up 0.2. Crude oil's up 1.1, Dave, at $63.55 a barrel.
I never thought I'd cheer for the Soviet Union getting their pumps going again, but that's the reason for the international change on crude, and I ain't happy with what's happening to it. Looking across the pond, Asian Rim mostly up at the close. Australia was off by a tinge. Everybody else was generally up. Mainland Chinese markets were fractionally up, but everything green. On the European side of the fence, we've got mostly green ink, too. UK's off by a little bit, but everybody else is showing green this morning. European index is up by an average of about 0.2%, halfway through their trading day. Getting my retirement together to be able to count on being able to retire someday. I wonder if I ever will. I just want to make it financially doable. How do I find you to make that happen?
Dave, that's why I created the Core Retirement Design, to help people design that retirement they always dreamed of. To get started, simple. Give us a call at 863-382-0037 to schedule your core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday. I lost my thought there. Saturday and 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
Every time I talk about retirement, the boss's hair stands on end. And he doesn't have much hair to stand on end, so I try to avoid the conversation. Have a good day, my friend. I'll see you tomorrow. Thank you.
All right. Take care.
Be well. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Folks, again, I want to thank you for joining us today. Hope your week's gone well. I look forward to speaking to you again tomorrow. Bye now.